Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bearish scenario where we're looking for a 5-wave impulsive structure to the downside in a wave A or 1, looking for a 3-wave corrective structure in a wave B or 2 before then continuation to the downside impulsively in a wave 3 or a wave C. The most common target area for your wave B is between the 382 and the 886 Fibonacci, taken from the high to the low of wave A, giving you a target area between 42.5k and 47.9k. For a wave 2, the common target area is between the 0.5 and the 0.786, 43.8k to 46.8k. Now, of course, this is quite a big area, so I have some additional resistance areas inside this box. And we hit the first one, which is this blue box here between 42.5 and 42.7k, as we have the weekly naked point of control there, as well as the current monthly point of control. Then we have one box above, which is over here between 43k and 43.2k. A level to keep in mind is the weekly at 43.950. And then we have the blue box between 45.9 and 46.7k. What's also important in this scenario is the vertical lines on the chart. These are Fib times taken from the high to the low of A or 1 to compare the time of wave A or 1 with the time of B or 2. Preferably, and by far most commonly, the corrective structure of wave B or 2 is finishing after the 0.382, which is where we are at the moment. However, we of course want to see a 3-wave corrective structure to the upside, and at the moment this looks like one structure. So even if price dips down, probabilities remain higher that we will see another move towards the upside to reach higher targets in this target area for wave B or wave 2. If we look at the bearish scenario on the micro time frame, then we are looking for a flat structure here where we have a 3-wave structure to the upside in a wave A, B and a wave C, where your common target area for C is between the 1 and the 1.618. Over here we now hit the 1.618, which was also in confluence with the target box, which we have hit as well. After this move, we then want to see a corrective structure to the downside. Now what you see over here is a bigger flat structure in a wave A, B, and then eventually an impulsive wave C to the upside. Because if you have a 3-wave move to the upside in an A, B, C, the most bearish scenario would be a flat where you do take the low. Common target for wave B is between the 1.236 and the 1.38, taken from the low to the high of A, which is in confluence with this yellow support box here, which is sitting between 36.9k and 37.7k. A more bullish alternative where price is not taking this low is a potential WXY double zigzag structure, where this is an ABC to the upside, corrective structure down in X, and then another ABC to the upside for wave Y, or a sideways double combo where we have again a WX, but then wave Y is going to be either a flat structure or a triangle. That is something we have to wait for and see. It really depends on the reaction that we now have locally, but these are some of the scenarios that I do have in the back of my mind. The bullish scenario on the 4-hour chart is a flat structure where on the higher time frame we have a wave 1, 2, 3, 4 and wave 5. Wave 4 is finished and we are looking for impulsive continuation. In this wave 4, we're then looking for a flat A, B, C. Wave B common target area is between the 1.236 to 1.38, taken from the high to the low of wave A, which as you can see is nicely respected. The wick is no problem. And then we're looking for an impulse to the downside in a wave C. Common target area for your wave C is between the two 1.618. One is taken with a trend-based Fib extension from the high to the low to the high here, and the other one is a normal Fibonacci from the low of A to the high of wave B. In this scenario, we are now looking for impulsive structures to the upside in a wave 1, 2, and then we want to see a big wave 3, 4, and 5, and preferably we want to see bullish CVD divergences building as price moves towards the downside as well. If we then go to the 1 hour time frame, then of course we are looking in that bullish scenario for a wave 1, wave 2 and then a wave 3. However, because of that bearish scenario showed earlier in a A1, 2B and then C3 to the downside, a potential 5-wave move coming off the low in a 1, 2, 3, 4, 5 can also be a wave A, B and C. So we have to pay attention to the structures that are following in time. Now here we then have our wave 1, 2, we're looking for 3, 4, 5. Price has now hit the 1.618 trend-based fib extension taken from the low to the high of 1 to the low of wave 2, which is a common target area for a wave 3. However, when we look at the volume, currently the most amount of volume in this recent move towards the upside is in the high. And if we are looking for a wave 5 to end the wave 3, then wave 5 by itself should be a nice impulsive structure. 1, 2, 3, 4, 5, where preferably the highest volume is in wave 3. We get a corrective structure in 4, make another high for a wave 5, inside wave 5, inside wave 3 on lower volume. So ending a impulsive structure on high volume usually is a low probability, and therefore what we want to see for an impulse here is another high on lower volume to finish 5 and 3 to then start the blue wave 4. Now the blue wave 4 is then in confluence with this blue wave 2, so that what we can then do is take a Fibonacci from the low of 2 to the expected potential high of 3. Now we do have a target box just above, so let's imagine 43.2k can be an interesting target area for the high of this wave 3. Then we toggle on the wave 4 targets. Most common target 236 to the 05, which is then 42.3k to 41.3k, and the invalidation for wave 4 would be hitting this 0.618 at 40.9k. After 3 and 4 and then another 5, we finish A or 1. We want to see a bigger wave 2 or B and then continuation to the upside. The current invalidation of this scenario is price moving to the downside and overlapping with this wave 1, as that is not allowed in an impulsive structure, and that would confirm a more 3-wavy move towards the upside here. If we zoom out to the 4 hour once again, then this is the range that is oh so beautiful, right? We have spoken about it over here for a while already, deviation up, and we were also potentially looking for a deviation to the downside to enter back inside this range. We closed a daily candle in the range. We were looking for a potential retest of the range low here for then continuation, hitting that point of control, acting as a very nice resistance where we can see a little bit of a rejection. Now, if price can move above this point of control and flip it into support, we could be looking for the value area high, which is sitting at 44.2k. I also always like to keep an eye on the support resistance areas inside a range. So when we have a range over here, and usually you see me pull a volume profile as well, I always like to identify the resistance and the supports, as these might be important at a later stage. Now price moved towards the upside, not much resistance here, but we did have some resistance which eventually flipped into support after hitting the resistance of that previous range. We are now in the middle of the previous range, but this resistance area above here is sitting between 43.2k and 43.4k, with this support area sitting between 41.9k and 42.1k. Now, before this move to the upside, we did have bullish CVD divergences. Price moved towards the downside, and once it made that low, it created bullish CVD divergences with the low here. Higher low in price, lower low on the CVD, absorption of market shorts with limit longs. Target is taking this high. And once price moved towards the upside, it hit the 886 Fibonacci as well, which is always an important level. The moment the 886 is hit, any move towards the downside has a higher probability of being a corrective structure in a wave C or Y, increasing the probabilities to take the high at a later stage, or of course, instead of moving down, we just move to that golden pocket and back up. It's something you see very, very often. I would advise you to test it on your chart as well. It's very interesting. After an 886 touch, price does like to go back to that golden pocket, potentially flip it, and then move back towards the upside, which was the case here. Then we took this high as well, both of the bullish CVD divergences playing out, and now we just wait and observe the reaction that we have here after hitting the resistance with the weekly naked point of control and the current monthly point of control. And if we then look at the probabilities of the different scenarios, then on the low time frame on the 4-hour chart, the probabilities remain higher for this scenario in an ABC or a 1-2 and then a wave 3 to the downside. We are still expecting more upside locally, also because of the 0.382 and looking for a 3-wave structure to the upside. Of course, there is the potential where this is an ABC, where now your wave C is finishing on top of the 0.382. So if we do get a move to the upside, there is always that small chance it just continues, but at the moment the probabilities would be higher for a larger 3-wave corrective structure to the upside. On the micro, on the 1-hour chart here, more locally, the probabilities at the moment between either an impulse or an ABC are neutral. We have to observe the reaction that we have over here, but in both cases we are looking for a retracement to come, either in an ABC and then a bit of a move to the downside, or we get a little bit more upside before we then expect a retracement in a wave B or a potential wave 2, of course, in the bullish scenario. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.